Good morning. In the next 20 minutes, my job is to tell you everything you need to know about ESOPs and MSOPs. Mission impossible, you say. Well, I was always taught by my finance professor to teach to the top of the class. You are the top of the class, so buckle up, and in the next 20 minutes, we'll get it done. An ESOP is a unique financial technique for the perpetuation of successful privately owned businesses that provides employees of that business a piece of the action, a direct stake in the success of the business. So how does that leveraged ESOP work? Well, there you have it. Study it carefully. This slide will self-destruct in 30 seconds. In the leveraged ESOP, the bank lends to the company, which re-lends to the ESOP. The ESOP takes that cash. It purchases stock from existing shareholders. Those shares are allocated to the participants of the ESOP as the ESOP debt is repaid. And when individuals leave due to retirement, death, disability, or for what the ESOP world calls other reasons, meaning they quit or get fired, they are entitled to be cashed out of the ESOP. 30 seconds are up. Let's talk about who lends to an ESOP. And the good news is that there are a significant number of banks still lending to ESOPs. Some national or large regional banks have specialty ESOP practices that target lending to ESOPs, and we're seeing the smaller regional banks get more involved in the process. So we can have a bank, a private equity group. That loan is to the company, as I said a minute ago, which makes what we call a back-to-back loan to the ESOP. And it's typically over a 5 to 7 year term. The assessment of the company credit is identical to any other loan. It's the cash flow that is tremendously enhanced by the ESOP. So the selling shareholder will receive cash up front, and the selling shareholder can and frequently does have to collateralize some portion of that loan. The bankers say that the ESOP is the only loan that creates its own collateral, which is one of the many reasons why so many banks like to lend to ESOPs. But who else can lend to an ESOP? What about the selling shareholder? The selling shareholder can take back a subordinated note with warrants, an equity kicker subordinated to senior debt, to a bonding company if it's a construction company. And then the selling shareholder is taxed on the principal at current capital gains rates upon receipt, interest at ordinary income, if they elect installment sale treatment. The company can be a lender. Yes, there are still companies out there with cash. And if they have the cash, they can make a loan to the ESOP and pay themselves back with tax-deductible or tax-free dollars. And private equity groups. Of course, we all know they have all the money, and they will make subordinated loans to the ESOP, usually interest only for a significant period of time. There are two private equity groups that actually target the ESOP as their preferred transaction, but many, many others that have either done an ESOP transaction or have looked at them, got comfortable with them, and are delighted to include the ESOP transaction as part of their repertoire. There are those out there saying, Ron, I got to see IRS code sections, at least 2 or 3 of you. So here we go. And of course, you can take a look at all this material later on. This is a sampling of the code sections. We got most of them in there that apply to the ESOP. ESOPs are governed by both the Internal Revenue Service and the Department of Labor. And if you're a federal government contractor, the Defense Contract Audit Agency. Is there oversight on ESOPs? You better believe it. This slide will self-destruct in 5 seconds. So, ESOPs provide tax-favored liquidity for owners of privately held companies. Are there other uses for the ESOP? Yes, there are, but 90% of ESOPs are installed for this reason, and that's what we're focused on. And 90% of ESOPs are in privately held companies. Yes, you will find them in publicly held companies. I mentioned SAIC, Science Applications International Corporation. However, up until about 2 years ago, it was a privately held company with more than 40,000 employees. It is now publicly held, and it has an ESOP. ESOPs allow owners to perpetuate a business with or without family members, and we find that owners who sell to an ESOP usually care deeply about their employees and frequently think of them as a second family. Tax shields. You've heard all about all the tax advantages of the ESOP. Well, let's review them. Those tax shields can equal 40 to 80% of the transaction, or sometimes even more. Translation. For every $1 million of ESOP transaction, the ESOP provides $400,000 to $800,000 in tax savings. Tax-deductible principal, paying down ESOP debt. Tax-free S-corporation income. Example, a 100% ESOP-owned S-corporation pays no federal income tax. Most states mirror. It's not a loophole. It is established in the code with substantial regulation and oversight, as I mentioned before. And finally, the tax-deferred, sometimes we hear it called the tax-free rollover, where individuals can sell their stock in a privately held corporation, not a public company, to an ESOP and defer capital gains treatment on the sale. And ESOPs are almost always in addition to a 401k plan, and the research, which we'll talk about in a minute, shows that ESOPs typically provide at least twice the retirement benefit that is provided through the 401k. What about estate planning? Well, what the ESOP brings to the table in estate planning is very simple. Liquidity. What can you do with liquidity when you're doing estate planning? Lots of things. That is the beauty of the ESOP. Liquidity allows for a diversified investment portfolio, and it provides for the purchase of financial products to provide liquidity for those estate taxes. And we all know that we don't know what's going to happen in 2011 with estate taxes and everything else. Let's talk for a minute about the MSOP, the Management Stock Ownership Plan. ESOP companies should allow management to purchase or otherwise receive additional equity outside the ESOP. I've heard people refer to this as turbocharging the performance of the company, maximizing the performance of the company, and Dick will make the case that to get performance from the company, you need an ESOP combined with an ESOP. How can key people acquire their stock? Well, it can be a stock purchase, it can be a stock bonus, it can be a stock option, it can be phantom stock, it can be stock appreciation rights, and it can be a combination of two or more of those, and frequently is. In your packet, you have a reprint of the July 2009 Journal of Financial Service Professionals article, Navigating Through Tough Times with the Aid of Employee Ownership. Dick and I co-authored this article with Brian Golden and Paige Ryan, and you'll find a lot of very good information in that article. I mentioned research before. ESOP companies are more productive, profitable, and have higher survival rates than their counterparts. Who says so? How about 30 years of research from the National Center for Employee Ownership, the ESOP Association, the Foundation for Enterprise Development, Rutgers University, that just had a $2 million chair of employee ownership endowed by Dr. Beister, the founder of SAIC, and lots of other organizations, including the General Accounting Office. These are not opinions, these are facts. And we think in terms of where we are today with employee ownership. When Dick Buxton made me that offer I couldn't refuse, the number of ESOPs were counted in the hundreds, maybe. And today, as we sit here, millions upon millions of employees have built substantial wealth through employee stock ownership plans. I will tell you that the father of the ESOP was Louis Kelso, the inventor, lawyer, philosopher, economist that began in 1956 preaching about ESOPs. I will also tell you that the legislative father of the ESOP was Senator Russell Long, Democratic senator from Louisiana, who in 1989 wrote this prophetic quote: "The long-run fate of our economic system will depend on whether it can capture the loyalty, hearts, and minds of people generally. Our capitalistic system should have a great many more capitalists." What an incredibly prophetic statement given the crisis that capitalism faces in our country today. So let's look at an overview of ESOPs. There's 11,000 in the United States. That's 10% of the private sector, covering over 10 million employees. I heard a stat last night that there's more ESOP participants than there are union members in non-governmental agency companies. 3,500 majority-owned ESOPs in the country. They're in every industry. 70% are in companies with less than 250 employees, and they're as small as a few dozen employees and as large as companies like Procter & Gamble and SAIC with 40,000 or more employees.